Alright, what is good, y'all? We are back on the charts today for a YouTube video, and I feel like you guys love these types of videos, me actually showing examples, so I thought I would do one today. And the topic is how to effectively risk on trades. I'm going to go over my strategy on how I kind of add in and risk on every single type of trade, and then obviously going over some principles that you need to know when it comes to risking, especially on prop firms. So that leads me to understanding ROI with trading prop firms and kind of getting into under risking, right? Because if you are going in with the mindset of trading prop firms, you should be going in with the mindset of, okay, I need to be able to, it's kind of a rinse and repeat process. So if you go into trading these prop accounts and you're risking $200, $300, $400 per trade, I mean, unless you're trading an insanely high RR system, which I don't, hence the title, a continuation strategy, then like you are never going to be able to get really ahead, and more likely than not, you will be trading that account for an extended period of time, and that gives you just more time, and more time that's gonna have a little slip up, right? So if you are on these prop accounts and just risking nothing per trade, you are more likely than not going to be on that account for an extended period of time, and it will take you so long to get a payout on that account. I mean, maybe you do get a payout, but it's like a very small account, and I'm going to assume that you want a bigger payout than just like maybe $1,000 or like even less than $1,000, right? And the only way you are going to achieve bigger size payouts is what? Risking heavy. So to just first start things off, you need to understand it is an ROI thing, and by risking pretty much and by not risking a lot, you are not taking advantage of it's like negative ROI, because you're spending all of this time to build up a big balance to request your payout, like maybe a month and a half to be able to request this payout. And it's just like you want to be just risking heavy on high probable trades, and by doing that you're able to rinse and actually build up your balance at a faster pace, so you're not just sitting there with your like thumb in your ass all month long because you've been risking $300 per trade. So you need to understand that it is a ROI thing, and by risking not a lot, you are just making it so much harder on yourself. And secondly, you should be okay with risking heavy. If you actually have confidence within your strategy, you should be a-okay with risking heavy on trades, right? So just wanted to get that out of the way. And the second thing is kind of going into psychology, right? Because when you risk light on trades, what does this do for you? So let's say it's an A+ setup. Like, I'm not going to show an example, but let's say it's an A+ setup. Now you're thinking, wow, I just won this great trade, but I made $500 per account on it, $400 per account. I mean, like, you're going to be sitting there and just thinking, damn, like I'm almost every single time, because I used to do this. This was, I think, almost my biggest issue when it came from just, like I said, like rinsing prop firms, because I would size like a bitch, and I would not able, and one, it would alter my psychology, and two, it would just take forever, right? So by sizing light, like what is going through your head most likely? You take an A+ trade, what is going through your head? Damn. Why did I not risk more? And then come the next trade, you are thinking, okay, I'm gonna over risk on this one, or I need to make up for what I should have made on the last trade. You're just thinking, and it gets in your head. It gets in your head. So like, and I'm not saying full port your account. I'm just saying you need to be able to take these trades with confidence and size heavy on them, because there are consequences if you do not. It messes with your psyche. Trust me, it's a big thing. It will mess with your psyche, because you're going to think, why did I not do this? I should have done this. I should have sized more. I know I could have made more on this because it was an A+ trade. Then what does that do? And what does that do for the next time you size on a trade, or you take a trade? Like, what is running through your head? I need to size more. I need to make back my losses, or not my losses. I need to make more because I didn't make more on the last trade. It alters your system, and you just start tampering with probabilities. So when you see an A+ setup, you need to know when to size on it, right? And okay, now what you guys been waiting for, so I trade a continuation, I trade a continuation, as you have most likely seen. So I'm going to go over the kind of add-in where I'm able to kind of risk minimal and just essentially add on to my wins and make my wins 10 times bigger than my losses. Not 10 times, that is exaggerating, but I want to go over this because this is what I've been doing and what helps me a lot when it comes to being able to actually take these trades with size and make a big P&L on the day, like I said, right? And without risking like minimal, like I said. So I believe this is an example. I'm gonna hope it is an example, but let me scale down to the 1 minute here. Let's see here. Okay, perfect. So I wouldn't like, maybe this is not a trade I always take, but it is a good example, right? So let's say I want a continuation lower. Looks like we have an Asia low here, or I remember I got a comment saying zoom in on the candle, so I got you guys. But let's say the drawn liquidity, I'm just gonna put a line. The drawn liquidity is right here, right? And you want to take a continuation lower to this drawn liquidity. So how do I approach it when looking to like minimize my losses if I were to get stopped out and maximize my wins, right? So typically with like a buffer built, it's maybe 2 to 3 minis or 1 to 2 minis, but with no buffer built, I typically do 1 mini and then possibly add in a second mini. But that is besides the fact that caters to like whatever your risk tolerance is and whatever account size you're on, but just the basis of it, right? So let's say I want to catch a continuation lower and I get my first presented setup here. Now, typically what I would do is I take this first entry here with, like I said, let's just say 1 to 2 minis is what I want to risk with. So I will take this first entry here with 1 mini. And why will I do this with 1 mini? Because as a low RR continuation trader, obviously low RR means you are risking a good amount on trades. And if you take a loss with heavy size, it is most likely going to be a big loss. So if I can find a way to minimize that massive loss, if it goes straight to drawdown, then I will do that, right? So I would take my first entry here with 1 mini. I would take my first entry here with 1 mini, targeting here, break even at these lows, right? So I'm taking this entry. Why am I only taking with 1 mini if I want to size with 2 minis? Because let's just say, worst case scenario, if this trade does not see a lick of profit and it goes straight to my stop loss, then I am only taking the risk of 1 mini and I'm not taking a full size 2 mini loss, right? So if this were to go straight to my stop loss, what am I losing? 22 points, I'm losing like $440. Not that big of a deal. That's okay with me. That is totally fine. So, right, what does this do for me? It minimizes my initial risk, and let me get into my add-in strategy and why and how I'm allowed to capitalize on the wins, right? So boom, I'm taking this first entry here saying I am okay with losing whatever I'm risking, $440. That's not a lot. And once this trade is more confirmed and ultra confirmed, that is when I'll add in a second mini, because now, in my opinion, and I will only do this when we get a really good confirmation of the trade. So again, I don't know this example. I'm just going to pray it's good, but let's see. Okay, so, okay. Ideally, it goes something like this. You get like maybe a little ideally you get like a little wick up here or something, and then you get like that strong closure. But let's just say for this case scenario, right, this strong closure closed, this candle closed roughly right around here, right? So let's say you get like a little wick up and then you get a strong candle closure anywhere within here. So what does this tell me, right? This is essentially telling me this trade has like confirmed, and we are more than likely going to just start displacing lower and go to the drawn liquidity and bare minimum go to these internal lows, right? So what does this do for me? It eliminates the initial risk of 2 minis, because like I said, worst case scenario, I get stopped out with risk of 1 mini. Best case scenario, I get a confirmed entry and I'm now in with 2 minis, and I play out and I'm able to get more out of this winning trade, right? And the only con this has is because it's just gauging thing. It is literally discretion when it comes to adding into these positions. The only con is if you add in when it is ultra confirmed and it still goes to your stop loss, right? So like I don't do this, like I only do this when I get the perfect opportunity, right? So like if it just goes boom straight there and I do not get an opportunity to add in, then I will. But what happens when it does that? Like, I'm not complaining. Why? Because I don't have a trade with a single tick of drawdown, right? Because I didn't get the opportunity to add in. Okay, but it's still a winning trade, and I still took it with minimal risk, right? So, it is kind of discretion when it comes to this. But best case scenario, you just add on to your winning trades when it mostly confirms, and you are eliminating just that fat risk you put on as a low RR continuation trader, right? Because like sometimes I go all the way down to taking like a 1-to-1 R, and obviously if I were to take that with 2 minis, it's a big risk. So if I can do this to minimize that initial big risk and then add on to my winners, that is how I do it, right? So that is how I do it. I'm gonna try to find one more example for you guys, so bear with me. You can maybe skip this video 10 seconds until I find an example, but yeah, just give me 1 second here. Let's see, because I do want to find a really good example for you guys. Come on, give it to me. Okay, is this maybe it? Come on. Perfect. All right, this is a perfect example. Perfect example. Okay, right? So let's say, again, you want to catch a continuation lower. You want to catch a continuation lower, and you obviously have that in mind. Strong draw on liquidity. Like, obviously, you have a good gauge on where price is going. So let's say your first entry is right here. Your first entry is right here with 1 mini rock, risking $400 again. So again, this is more of a high RR example, so it's not the best. Typically, it's better when it's just low RR and you're just risking and you're reducing that initial risk, but this is a more high RR. But I'll still give a good example, right? So you take your initial position with 1 mini here, and you're totally okay with this initial risk if it goes straight to your stop loss, right? And essentially, you are waiting for just a second confirmation and a second confirming entry to be able to add in to your position and just add on to your win, right? So let's see what happens here. Like, you guys tell me when this trade is ultra confirmed and more confirmed. Shit, I thought it was gonna be right here, right? I would say on this candle, this is when the trade fully confirms. Like, this might be like a 5-minute close or another strong 1-minute candle closure in the direction where you want to see price go, right? So in my opinion, you can get a even more confirmed entry and just add on to your winners where you did not put that initial big risk on the table 2 minis, right? So your first entry right here, boom. Second entry right here, and your average position probably, and your average, gosh dang it, and your average position will probably trail to right around here. So now, boom, you're in this trade of 2 minis when it is like ultra confirmed and you are expecting price to just flush the draw on liquidity, and you have added on your size to a winning position. And I would expect this, again, I don't know this example, but I would expect this to just flush the draw on liquidity. Okay, cool. Point being, it was a little bit frisky there, but again, point being, you were adding on to your winning trades, right? You were adding on to your winning trades and just minimizing the initial risk. So this is, in my opinion, the style I do to effectively risk heavy on trades with not risking literally half my account size. This is how I do it. I feel like it is very effective. It has worked for me, and you can try it out. And again, like I said, it does require discretion because your second entry is just when, in your opinion, the trade is ultra confirmed, right? So that's just how I do it, and I thought I would show you guys this, and I feel like it is really effective. So hopefully this can help you. But now, getting into a few more things before this video ends, and I think this is very, very important as well, right? So, well, let me get back here. Wow, NQ is ripping right now. Wait, no, never mind. But, okay, so offense and defense, right? You need to understand when, here, I'm gonna just pair these two together. Actually, I'm pairing all three together. Offense and defense, knowing when to size and understanding probabilities, right? Because you need to understand when is the best time and the highest probabilities for you to enter in the markets, right? Like, let's say going into a day, you have already seen we have taken out 4-hour highs or 4-hour lows. We are trading in a huge daily gap, a huge hourly gap, and there's no objective on the day to take anymore, because as a continuation trader, you are most likely trading to draw on liquidity. So when there's no draw on liquidity, or let's just say we are clearly in an hourly range, a 15-minute range going into that day, or let's say it is low volume before CPI, yada, yada, yada. All of these things that could lead to a low probability day, right? You need to understand these days, and essentially this is how I approach those type of days. So if I wake up, I see the markets, and I'm saying, oh, this does not look like a really clean day. There's no real strong draw. We're kind of in a range. I just approach that day with full defense. My mindset going into that day is I'm already told myself in my head I am not looking to take a trade. I've told myself I do not want to take a trade today, and I'm not going to take a trade unless some type of A+ setup appears and we maybe end up expanding a crazy amount to the next draw on liquidity. So like, this is defense, right? You need to understand when the market is not in your favor, like one of these things, no draw on liquidity, whatever, is not in your favor, and you need to play defense. By doing that, it's just simply telling yourself, I will not look to force a trade. I'm not actively looking on the charts, looking at the charts, looking to force a trade until something absolutely A plus kind of jumps out of the screen at me, right? Just because just by doing this, you're just understanding the probabilities are not in your favor on that day, and it allows you to more than likely preserve capital because you are not looking to impulsively take a trade that day, and vice versa, right? Let's say there was a day last week that was, oh my gosh, it was A plus. Yes, it was this day, right? So going into that, you see, boom, we are in a trending market and 2 very high time frame draws in liquidity. Everything you could possibly ask for as a continuation trader. And this day, I took 3 trades on this day. Why? Because I was on full offense and I understood that probabilities were heavily in my favor that day. Heavily in my favor. Why? Because you and me can both tell, and you can both probably take a really good assumption that price is going to sweep out these lows, right? I think everyone and their mother could assume that price is going to sweep out these lows, and especially when in a high volume trending market, these are the days you need to take advantage of. As a continuation trader, this is what you look to take advantage of. It is very high probabilities, and this is when you need to be able to grab your balls, size up, and go all in on offense, right? Because you don't get these days often. You do not get these days often. So when they appear, you need to be ready to capitalize on them. And it's really just a matter of understanding what days are the best, what days are the worst, right? Like I said, if a day is clearly ranging or something, no draw on liquidity, just go in with the mindset of, all right, maybe I don't need to take a trade today. I don't need to put my risk on the table today. I'll just preserve capital to when we get a day like this, right? And that is when you go full offense mode and are open to sizing on trades. And that's pretty much the same thing when knowing when to size, right? You need to understand that some days are just going to be 10 times better for your strategy, and you need to know what those are. I can't tell you, your strategy is more than likely different than mine, so it's all different for everyone, but you need to know when the probabilities are heavily in your favor, and you need to take advantage on that and take those trades with size, right? Everyone should only take those A plus setups where you know probabilities are in your favor. So hopefully this helps, and you guys kind of understood it with the whole adding thing and just kind of these basic principles on knowing when to effectively risk and size on trades, knowing probabilities. But hopefully you guys enjoyed this video and it helped you. And in the description, TikTok, Instagram, my Discord, where I teach trading for free. Yes, for free. And if you want accounts with Alpha Futures, code Jack will get you discounted. Help a brother out. And with that being said, subscribe, of course, and I will see you guys in the next one. Peace.